So this is weekly commentary 48. So from the last week, we expected the next weekly candle being this one to trade lower and down into the sell side liquidity pool. The close of it was, although it's bearish, you see how the expansion was to the downside, right? We can talk about the high of the week here, just to reiterate a teaching from the mentorship about, your weekly profiling. Before we do that, I'm still expecting sell side liquidity pool to be tagged here into this monthly fair value gap. If you want the reference for the monthly fair value gap, it's this, right? This candle's low to this candle's high. I want to see the move into here. Now, if we go on a daily time frame, right? It was quite consolidated. However, there was still some intraday trades you could have taken off the 4 hour time frame. This PD array was tapped into, right? If I just remove the lines we have from this candle's high, right? And we'll use this candle's body. It's a fair value gap. And you see that this candle comes up into it and rejects. And that, you could have hunted shorts the next day. When I see a candle like this, right, it sweeps the previous day's low and is rejected off a premium fair value gap. And you see how it comes back down into the middle. It's indecisive. Now, why? Because the thing is, I'm in two minds here. Am I basing shorts off the idea that we rejected off of a premium array? Or am I going to be long off the fact that we swept, Tuesday and Monday's low and we come back into the range? You see, when you're conflicting, and ICT calls this being neutral, right? When you can frame trades both ways, it's better to sit out. And the reasoning behind it is this. You want to wait for a clear side to be favored because, and I gave you the heads up on the Snapchat story, right? If you go to the DXY 1 hour chart, this is the day, right? This is Wednesday. You see how that's the move into the fair value gap on the daily, and we came down here. Now, you have a breaker block here, right? This is also a breaker block, order block, and we have a fair value gap. Now, I call this being in between a rock and a hard place. Because what do you do here? Are you going to show off the fact of this or this? Now, either one is going to be short-lived. You see how choppy it is, right? You see how difficult Thursday was, right? Now, Friday offered a nice market maker sell model on the DXY, and I managed to catch that on the London close, and I'm gonna break down that trade after this weekly commentary because I want to give attention to that specific model in its own video. One thing I want to reiterate to you guys is this. We all know when to trade, and we all know, right, given that you're up to date with the commentaries and you're making your way through your most of the content, you know how to piece it together. Intraday, you know what you're looking for, your high time frame PD array, inside of a kill zone, you're waiting for a run on liquidity, market structure shift, and waiting for your drawn liquidity to be met. But one thing that you guys, and it's very normal, and I was like this myself a few years ago, I had the mindset that I just want to go in and find trades. I did not even consider the fact that there are low probability conditions. And there are times where I should sit out in the market. And I told you guys on the Snapchat private story that we have, I marked out this breaker block and I marked out this fair value gap. And I said, what do we do here? Do we go long or do we go short? We do nothing. We wait for one side to be favored clearly, right? You need to wait for, like for example, for here, you don't really know what's going on. You're moving up into here, you're still wicking. Are we going to go higher or continue going low from here, right? Because you could have shorted here and people would have targeted this, this discount of the range. Or you could have went long off this order block and fair value gap and went to the premium of this range. You see how it's a headache and you don't know which one to take, so sit out. Because what you would want is this. You would want one of them to exist. You wouldn't want something like this to happen. This is a seek and destroy model, by the way, right? What is a seek and destroy model? When you have a consolidation and you run the buy stops and then you go and you run the sell stops and now you come back into the middle and you're consolidating, this is a seek and destroy model. Now, why is it called seek and destroy? When you have a range, right, like this consolidation right here, above it, there's buy stops. There are retail traders. This is back to the free content lesson one. There are retail breakout artists, right? And they have their buy stops placed above here because they believe, or above here. because they believe if we, break this high, we're going to keep on breaking higher in the idea of strength, right? They believe in the idea of strength and weakness. Strength being if you break a high, you're going to keep on going. So I want to, get in with the strength and buy on the breakout. And likewise, the weakness on the lows. If you break the lows, we're going to keep going with the weakness and go lower and make a new low. So I want to get in a sell as we break the lows. So they had the sell stops at the bottom of the range and the buy stops at the top of the range. Now, this profile is not a profile that we trade. It's a profile to identify as a low probability condition. Now, that is just as important as a high probability condition. The reason being, trying to trade this is going to probably result in, a higher chance of you taking a loss than a high probability condition giving you a win. That's the things you need to weigh up, right? Now, when you run the buy stops, right, their stop losses are where? The bottom of the range around here. And also sell stops here. And then the sell stops are going to be tagged. And then you're back in the range. So now you have buyers and sellers and they're both in drawdown. The market, the algorithm seeks and it destroys the liquidity. That's the idea behind it if you want to, make a way to understand and memorize this concept. It seeks both sides of liquidity and it takes them into the middle and drowns them. Because now these guys going long here and these guys going short here, they're consolidating sideways, right? Now, when you see consolidation, you're going to see expansion or reversal, right? This is what to wait for. Now, if we go to our Forex Factory calendar, on Tuesday, Thursday, and Friday, I believe, right? So on the Monday, it's pretty, dry, it's quiet, a yellow USD folder. And then on Tuesday, for pound and for dollar, we have red folders. Thursday, we have GDP, right? Even these, right? These all together is what you have to consider. It's not just the red. Look how many, 1, 2, 3, 4, 5, right? It's all USD 130. Look how many USD news drivers are coming out at 130, right? And on Friday, we have the core PCE, right? Now, what do you do, right? And this is going to be your next lesson, which is coming very close. Use your weekly profiling, right? So the week that I'm expecting a bearish week, right? Now, in saying that I'm expecting a bearish week because I'm favoring that draw onto this south side liquidity pool, I understand that there is a fair value gap here that rests, right? There's a fair value gap here. If I see Monday trade higher, Tuesday can trade above Monday's candle, right? Even if Monday trades into this, and I want you guys to pay attention to this because this can apply to your low time frames. Monday trades up into this fair value gap. Tuesday Tuesday has all those news drivers for the USD at 130. So even though Monday traded into this fair value gap, you can still expect Tuesday to turtle soup Monday's high, maybe foreclose this or even the wick overshoots this a bit. And then I would, see this. I want to see displacement away from here on like a 15-minute time frame, 1 hour time frame, and then I would go in and entertain a short DXY. And then, let's say the Wednesday pulls back a bit into the range. Well, we know Thursday, Friday will have a news event and it can continue on. Now, let me try draw that for you using the path tool so that you can see a visual representation. This is Monday, right? Let's say you start off like this. This is, Sunday's open, Monday. Now you trade up into that fair value gap, right? And you come back down a bit, right? Now, Tuesday has a news driver. Now, this is what I want you to pay attention. The candles with the news drivers you're watching runs on liquidity. Something I'm realizing from a lot of you is you're overemphasizing PD arrays and you're underemphasizing your draws on liquidity. Remember, the algorithm is looking to deliver liquidity. The PD arrays are important, but focus on your pools of liquidity first, right? In that order. Give, a hierarchy to the liquidity first and PD arrays after it, right? Now, Tuesday has the reason to run Monday's high, right? So you can see Tuesday come back down. Now, let's say it displaces, right? In the same day, the rest of the day from New York into London close, maybe even into the CBDR time, it displaces away. Now, you can see Wednesday come up, maybe trade up a bit, and then Thursday, goes down, Friday, possibly continue it. This is how you have to build your weekly profile, right? Now, it's not going to be set in stone, and if your weekly profile as the week develops is wrong, it doesn't mean you sit out. You have to find a way to get on side. That's the adaptation a trader needs to make, right? Now, in saying that, because Tuesday has a news driver, it's more likely to place the high of the week than Monday. So even if Monday trades into this fair value gap, Tuesday can overshoot it and then trade lower. Now, those news events are at 1:30. Now, pay attention to the candles I'm going to mention. Inside Tuesday, the 15-minute time frame, let's say the 1:15 candle, right? You see the 15-minute candle of whatever it is that you're trading on, DXY, Euro, Pound. Because the news event lies in the the 1:30 15-minute candle, anticipate the previous candle's high or low given the context to get run, right? That's why it's very iffy to get in on the drop of the news event. If you do trade news, right, you want the news to do one of two things. You either want the news to carry your trade to take profit. You want to either be in before the news event, or you want to wait for the news to manipulate. Notice this. You're always in a state of power 3, and this is, make a note of this. You're always in a level of power of 3. Accumulation, manipulation, distribution. Try and understand what phase you're in of the power 3. Are you in phase 1, 2, or 3, being accumulation 1, manipulation 2, or distribution 3? Now, the news, right? Let's say the news was manipulative. You're going to be hunting distribution, right? Because the news is going to be either manipulation or distribution. And before the news event, you'll see accumulation. Now, hear this. If accumulation is happening before the news event, it's likely it's going to offer manipulation. It can offer both manipulation and distribution, but it's the first one you have to realize, right? Now, if before the, you know, prior to the news event, you're already manipulating, it's likely that the news event is going to distribute. Frame the phase of power of 3 with time of day. Time of day being the news events of the day and the kill zones of the day. And that is how you hunt in the day. It's all power of 3 and time. Every single candle is a power of 3, right? Open, manipulation, distribution, and then back to the range, right? Open, manipulation above the previous candle's high, distribution to the low, and come back and close. Accumulation, manipulation, distribution, every candle. What you want to do is find the phase of accumulation, manipulation, distribution you want at intraday level, right? Um, Enough talking about that. Mark this liquidity pool out if you go on a daily Euro USD chart. Relatively equal highs here. Pound, you still want to work towards this pool of liquidity. If and then you can consider the run on these highs. We have the news event on Tuesday, I believe, for pound. Yeah, the flash services and the flash manufacturing. So watch pound on the Tuesday as well. If we're running low on pound, that Tuesday could be used to run this pool of liquidity here. The bonds is what's interesting, right? The bonds being in this sell side liquidity pool that's being run now. Now, what is this, right? This two lines is this. On the weekly, we had a fair value gap. Now, we had the sell side liquidity pool as well. Now, you see how we traded down into the sell side liquidity pool and into the weekly fair value gap. Now, if you're wondering what this dashed line is, this is the 1st of Feb, and that is FOMC. That's the fund rate. That's when they're going to change the interest rate, or increase the interest rate, I should say. Now, this is very important, and this is fractal, and this applies to every single trading day, going forward. We all hunt market structure shift, and I teach it to you guys, but you need to consider a few more things with your market structure shifts. You need it in a logical area. We don't hunt patterns, right? We don't hunt patterns. Running this sell side liquidity pool, these sell stops inside of a bullish weekly fair value gap. This is, the prime context and the environment for market structure shifts to be favorable. Now, if you break this high, when we break that high, I don't want it to be just a measly sweep or a wick. I want to see displacement above that. I want to see a candle, like a candle punch above it. right? I want to see that candle punch above it, and that shows, displacement above, that the algorithm is trying to reprice higher and is breaking, buy side liquidity. So then we can, target this trend line, and this is a sideways candles. When you see candles like this sideways on the daily, it's going to be an accumulation on the lower time frame. You see how, what's it looking like? Market maker buy model. Now, look at this time here. This is what we're working off, right? Given we do a market structure shift here and we accumulate, right? And let's say we manipulate down into some level of fair value gap before this FOMC event, and then the FOMC event drives the DXY higher, for example. This is how you blend what I just said. Power of three given an aspect of time, right? What phase of power of three are we going to be in given when we reach this FOMC event? This is how you hunt, right? Now, I was asked to also touch on the US 500. Now you see how we had this big displacement down lower. Go on the weekly time frame, right? We had that volume imbalance, right? We traded back down into it. Now I'm favoring the high of the next candle to break and the low of this candle to stay intact, right? I want to see us, have a body close above this wick, right? I want to see a bodied candle on the weekly time frame trade up into this wick, right? If we go on a daily, we had a fair value gap from this candle's high to this candle's low. You see how we trade down into it, rejection block as well, and now we're displacing. So I'm favoring this buy side liquidity pool to be taken. This accumulation, expansion, retracement, 50% of the range if you eyeball it from here to here, and we're gonna probably expand up. Favoring this buy side liquidity pool to get tagged. Forget this wick, right? Forget this wick exists. Just try to look at this without the wick. This candle's high to break, and try and make our way up into here, right? The one that everyone's talking about because of the rally that we've seen. Now, what I have here marked out as the accumulation, right? If we go on a weekly chart, and I was thinking to myself, right, when you see this is something I look for intraday as well. We have a fair value gap here now. We have loads of imbalance here, right? But you see, you're monitoring the move to every single fair value gap. You see when you see this candle move down lower and we saw this candle move up, expect expansion to the high of this range here, right? This candle's high, expect that to be traded through. It's very unlikely that you come into this fair value gap, you move away from the up candle, and then you come back and slam down into these, right? If that was to happen, you would see the market offer retracement down into this first and then offer open low high close from the fair value gap like this, right? Now, if we go on a monthly chart, right, we're running out 1, 2, 3, 4, right? Now this is the candle I'm looking at, right? This is where I'm monitoring. We had a fair value gap close here, right? And you see how this candle ran this previous candle's high. For us, right, for me to get an ounce of being bullish on Bitcoin, I need to see like displacement through this candle that rebalances fair value gap. I need to see a displacement through that. Now, I'm thinking it probably, I'm saying as an analyst, I don't expect it to go higher from here. Like gun to my head, I don't expect this candle's high to get broken. Even though there's maybe a tiny fair value gap, I'm expecting this fair value gap from this candle's high low to this candle's high to hold, right? It doesn't fit the narrative I have for the DXY. For the DXY to sweep the previous, that weekly low and then, offset higher prices, to me, this is just you know, an excitement pump to get retail going again. I don't know how many of you lurk around in crypto chats. I'm in a few. I don't participate in that, but I'm just in there, and I see a lot of guys, just FOMOing at the mouth. You're seeing a lot of people on Twitter coming back and whatnot. Look at the bonds, right? Look at the bonds, look at the dollar, and look at Bitcoin. This is your intermarket analysis you need to consider. I don't think we're going to break this candle's high because I'm favoring, just us to run into this fair value gap and then move away. The minute we run into this fair value gap and if we reject off of it, you're probably going to see Bitcoin, start to retrace down. Right now, I'm framing this as a power of three, right? accumulation, manipulation. Now, if you're thinking, but how is it manipulation? Because we accumulated, we ran up, now we're doing this again. Manipulation doesn't mean it's one move, right? This is something you guys need to realize. It's not one move for manipulation. The market maker sell model, right, is a power of three. Just to reiterate again, accumulation. Now, this is all going to be manipulation, right? Let's make it easy and just make it look like that. Accumulation, the move from here to here is manipulation. Now, just to give context, right? This is a rejection block as well, by the way. It swept the previous candle's high, fair value gap, rejected, order block, right? Mitigation block. Now take that to the daily and monitor this, right? You'll see if this is, manipulative. If you see a displacement all the way through this candle's fair value gap, and of course through this low, hunt the crypto guys, hunt the market maker sell model on Bitcoin, right? The move away from this rejection block right now, yeah, we have a wick through it. That doesn't mean hunt shorts. Remember, you need the displacement. Now, we have news on the Tuesday, Thursday, and Friday for the US economy. So that's obviously going to relay into Bitcoin as it's against the dollar. So that's something to watch out for if you're watching crypto. Other than that, I believe we've touched on it all. The US 30 is the same as, the US 10. Something I want to touch on actually. Notice how we didn't run, right? And this is the divergence between the bonds, right? Notice we didn't run this candle's this weekly low here, but the US 10-year did. Now you see, you would be bearish if you just looked at the US 10-year, but the US 10-year grabbed the liquidity and rebalanced the fair value gap, right? Essentially, a new low was made, a lower low, and this is what's looking like a higher low for now, unless we, completely trade through that. That's going to show underlying bullishness in the bonds, right? Failed to make a new low whilst the US 10-year ran its low into a fair value gap. And if it offers a market structure shift, watch that run there. Remember, we've been saying market maker buy model on the bonds, right? Accumulation, sell side, a bit of a dodgy buy side, but you see how again it's coming from here, accumulation, manipulation, and see a level of distribution. I have at least this high in sights, right? So that's going to be it for this weekly commentary. Now, in the video I'm going to upload literally straight after this is going to be the breakdowns of those two trades that were posted into the mentorship channel. Um, I'll try and do some of those a week. If I manage to record something, sometimes I don't because if it goes over an hour recording on the MacBook that I have, it corrupts the file. So if I have something that's a bit under an hour, you know, perhaps given that it hits the target in an hour, I'll definitely send that in and we can break it down because a lot of you guys now is not executions, but you need a bit of you need to see it, right? You need to see the trade itself and study it so that you can perhaps participate in a if it forms again. Just a recap. I'm expecting still sell side delivery on the DXY. Have this this weekly fair value gap marked out. If we start to push higher off the Monday, we can trade up into this fair value gap, monitor it from there. Be mindful of Tuesday, Thursday, Friday, right? So Tuesday maybe opposing end of the range, and Thursday, Friday be a continuation of the main weekly expansion. Still frame this, right? You see, we traded into the rejection block. We wicked off of it. It doesn't mean that we're rejecting off of it to be bullish. Mark this fair value gap out. Now, if we trade through this fair value gap, but like with a strong displacement again. And why do I emphasize trading through fair value gaps with displacement? The displacement shows the intent to reprice by the algorithm. Now, if it's gonna, trade through this fair value gap, don't get rid of that line, right? It can reclaim it. I think I've taught this to you guys in a previous weekly commentary. This is what you'd hunt. If we displace through that, keep this fair value gap lined out. Old fair value gaps, when traded through, act as new support. Something like this. You'll frame retracement back into here and to go long again, and that's even on an intraday level, right? Um, so that covers everything now. Until next time, and I'll catch you guys in the next one.